Let's get across more of these moves and, of course, what we're also expecting for our session ahead. Chris Conway from the Australian Stock Report is joining us live from our Melbourne studio. Chris, good morning to you and thank you so much for joining us. Now, if we take a look at some of these moves, gold, bonds, the Japanese yen, the VIX index all seem to be pointing to higher levels of caution in global markets. Geopolitical tensions over Syria, Russia, North Korea all seem to be dominating. And overall, global markets, if you look at the US and Europe, they just seem to be treading water right now.
Good morning, Leanne. Yes, look, I couldn't really agree with you more. Obviously, there's a few competing forces going on at the moment. So the geopolitical tensions, as you mentioned, and the apparent flight to safety that we saw overnight. But then looking forward a little bit further, some positive expectations regarding US earnings season. If we pivot back to here in Australia, obviously, the Aussie market has been on a mini tear of late. It's really taken on all comers and just kept pressing higher. But, there's still concerns locally as well. So it seems like, as I said, there's a lot of strong competing forces at the moment. And I don't think anyone in the market is really too keen to make a significant bet either way. And it's still that sort of wait and see approach that you alluded to.
Yeah, well, as you say, despite the backdrop there of the geopolitical tensions, it seems like nothing really can derail the strength of the ASX at the moment. Our market just seeming to continue moving higher, heading towards that 6,000 mark. I think the question, looking at those 5 futures up 18 points this morning, can we hold on to those gains?
I don't think we hold on to the gains today, Leanne, and that's because there was such a strong focus on risk aversion overnight. Even though then, I think the Dow was down 140 points at its worst, traded back to near zero on the close. But it was the fact that gold caught a really strong bid, US Treasuries caught a bid, and the Japanese yen caught a bid. So there was clearly, towards the end of the session, a flight away from risk and into safety. But again, evenly poised. Today might be a microcosm of what we're seeing more broadly. Which one of those forces will win out? So, yeah, look, in terms of the SPY futures, I don't think we hold on. There are some platforms out there that run synthetic SPY futures, and already they've started to peel back to being, say, 10 points ahead rather than the 18 points that you spoke of when the SPY closed, or the official SPY closed. So it does look like we'll peel back a little bit. But then again, you put it in the broader context of the Aussie market, as you say, which has been performing very strongly of late. And it seems like investors and traders want to push it firmly towards that 6,000 level.
Yeah, that is the next target there. And of course, we have a shortened holiday week with Easter this week, next week, and then we have Anzac Day coming up as well. So a few shortened weeks, and it does tend to be the case that we get exaggerated moves, don't we, on the upside and the downside when we do see shortened weeks like this.
Yeah, we can. Everyone wants to either square positions away before a long weekend. Invariably, people don't particularly want to take on big bets before a 4-day break. And with the added geopolitical tensions and the wait-and-see approach towards US earnings season, on the balance of probabilities, you'd bet that markets would sort of roll over a little bit and de-risk a little bit. But again, it flies in the face of what we've seen over the past couple of sessions when we haven't had particularly strong leads from Wall Street. Yet, lo and behold, the Aussie market has managed to push anywhere between 20 and 40 points higher. So I don't know who's going to win the battle, Leanne. If I did, it would be very nice. But, like I said, there's just competing forces out there at the moment. And I think, when you're sitting there trying to make decisions about trading and or investing, maybe now is not the time to be taking on huge amounts of risk, because there's so many unknowns out there. There's things that are difficult to quantify. We don't know whether tensions will escalate. We don't know what crazy Donald Trump's going to do. So I think now, if ever a time over the past quarter to sit on the sidelines, I think this is probably it.
Okay, that was actually going to lead into my question there, because despite all of what's happening, there does seem to be momentum behind this move towards the 6,000 mark. And I wanted to actually ask you whether you're participating in this move.
Look, I do have a couple of open positions, one on Sydney airports, which you and I have discussed ad nauseum in the past. So, yeah, there is a little bit of risk that I have out there at the moment. But, it's not certainly the amount of risk that I had. As you know, Leanne, I've been a bull for a while now, for a good part of 8 to 10 weeks. And I was very bullish, and I was happy to add positions through that period prior. Now we're at lofty peaks. We are approaching the 6,000 level, which will act as somewhat as a psychological resistance, and there's all these other sprinklings of risk that are now baked into the pie. So no, me specifically, I'm not taking on a huge amount of risk. But what I would say, as a countervailing argument to that, as a trader, you ride the momentum until the market tells you that you shouldn't. So I would say to those who are long, stay long until the market gives you a really strong signal that you shouldn't be. For me, I don't mind carrying the little bit of risk that I have on the table now, but I would say that I'm not willing to go out and add significant amounts of risk at current levels.
Speaking of risk, I mean the Japanese yen, and look, we've touched on it, and gold. Jumping to 5-month highs there, the safe haven assets really rallying pretty strongly. Do you think gold will continue its rise, continue its upward momentum, particularly if Trump's economic agenda continues to come under question?
Yeah, I think maybe not necessarily Trump's economic agenda, because that's already a raging mess. I think it's all about the geopolitical tension. So any escalation of tensions in Syria and by an extension of that, Russia, or between the US and North Korea. You know, I was reading earlier this morning Donald Trump's tweets about North Korea asking for trouble. Well, that's picking a fight as well, Donald, so you wait to see what you get. But any escalation in either of those areas is always going to see a further flight to gold. Just from a technical perspective, you and I spoke about this last week. We spoke about gold, and I said gold was one of the commodities that I liked along with oil, and not so much iron ore. And I said that, look, gold probably needs to clear about 1260, 1265 in order to open up a pathway into 1300. So on Friday, gold really strongly rejected that level. There was a huge rejection of a sort of 1265, 1270, and it looked as though gold had failed. But then, of course, what happened overnight, it very clearly punched through that level, and as I said, now opens up a pathway into the 1300 level. So, you know, it might even not necessarily even be that we need a further escalation in those tensions. Just technically, now that it has cleared that level, I think that will attract more buying, particularly from short-term traders, and that momentum alone could carry us into 1300 without further escalations, just, you know, a continuation of what we've seen in recent days.
Yeah, well, we certainly will be looking for support in the gold sector there today, and I think the energy space will be another interesting one, because we've seen global oil prices ending the session higher overnight, the 6th straight winning session, I believe, for WTI crude. And look, it seems like Saudi Arabia telling OPEC officials that it does want to continue its OPEC production cuts.
Yeah, absolutely. And again, I alluded to this last week. Saudi Arabia has so much to lose if oil prices fall. They've got a huge social welfare system that is funded almost entirely by the sale of oil. So they've got a massive, massive interest. So it's not surprising to see them come out overnight and say that they want an extension of the production cuts. And whereas previously I'd been a skeptic about the ability of OPEC to hold the deal together, I think they can, and I think they will, and it's because of the might of Saudi Arabia. I mean, they are the key player, coming out and perhaps imposing their will on some of the other smaller players in that cartel. But I think the deal holds up. I think 50 once again is the new floor. And again, as I've been on record as saying, as oil dipped below that level, you know, a lot of people turned bearish and were calling for moves back into 40 and maybe even some into 35. I didn't see it. I thought there was always going to be a support there. You know, don't get me wrong, I don't think we go charging to 60 anytime soon, but I think 50 to 55 is where oil lives for the foreseeable future.
All right, fantastic. Chris, we'll wrap it up there. It's been wonderful having you on this morning as always. Thank you so much for joining us.